Happiness isn't something that depends on your surroundings. It's something that we make inside of ourselves.
Acts. Until the Federal Reserve acts to lower interest rates, the stock market's not going to wake up and smell the coffee unless it's different this time. Now, it's different this time. Let's examine those 4 words, shall we? Or not. There is also a perfect track record. You do not have a downturn in the stock market until the Fed moves to lower interest rates. Look back at history. It's there for the taking. The S&P 500 goes back to the post-war era. You can see every single time the Fed launches an easing campaign, stocks wake up and they go, wait a minute. We just wanted for the Fed to say that monetary policy was going to get easier. We didn't want them to act on it. If they act on it, for heaven's sake, we really are in recession. And their stocks go. But it doesn't happen until the Fed moves. And if there's one potential criticism for the Fed not acting until after the election, maybe that would be it.
The Bank of Canada has cut interest rates by 25 basis points. You see, the Canadian economy is not as large as the U.S. economy. So what often happens is smaller nations will test out policies before it happens in the larger nations. And this is especially true with G7 countries. The group of 7, the 7 allies, work together not only in economic policies, but geopolitical policies as well. And when the Central Bank of Canada cuts interest rates, what they're telling you is that the G7 has already decided that they're going to lower interest rates. Canada is just going to be the first country that does so. And we can look back on past policies where Canada goes first and then the rest of these countries follow. Now, the ECB has also lowered interest rates. So right after Canada, the ECB lowers their interest rates. So sooner or later, it's going to come to the Fed, and the Fed's going to be forced to lower their interest rates because all currencies are tied to each other.
The blockchain, but I think for blockchain, when it's especially for public blockchain, it's connected to the internet, and the risk is very hard to control. I think so. When we try to innovate by integrate anything that related to banking system, so everything we need to ask for the Bank of Thailand approval first, even for just the experimental project. Because right now, for our banking group, we cannot hold any token yet, even just for experiment purpose. So I think that's one example. That's why it's been challenging for us, even though we want to try to be innovative and experiment with new solutions. It's still under the being regulated entity. Yeah.
The Bank of Thailand issues policy, and all of the smaller banks within Thailand have to follow the policy that the central bank sets up. So what she's saying is that the central bank does not allow any type of involvement with public blockchains, which is crypto assets. So they don't allow experimentation with crypto assets. They don't allow utility with crypto assets. So until that changes, they can't even experiment with it. And we've seen numerous proof of concepts come out of Siam Commercial Bank. We've seen the smaller Bank of Thailand banks actually wanting to dive into the technology, but the Bank of Thailand is forbidding it. So when that changes, we could see a rapid onset of different technologies being adopted because the work is being done already. It's happening in the background. It has happened with private and permission systems. So once they give the green light for public chains, the race is on. Siam Commercial Bank in Thailand tweeted out that XRP system will be announced soon. And this later came out. They said this was untrue. It was just somebody behind their social media account. But why would somebody lie about that? In my opinion, this was all under NDAs and they weren't allowed to talk about it, but their plans are very clear. NordVPN is a VPN service. A virtual private network allows you to conceal your IP address by logging into a private network. The private network is an encrypted network that conceals your search terms and browsing history. Cookies, adware, malware, spyware, these are tools by advertisers or malicious actors that try to analyze your digital footprint to either sell you something or to hack your accounts. That's why when you use a VPN, it protects you because nobody can track and trace where you are going and what you are doing. Using public Wi-Fi opens a door for man-in-the-middle attacks. Some hackers will inject software into public Wi-Fi, and every site you submit info to, they're storing. This can include bank credentials or crypto credentials. Therefore, using a VPN with public Wi-Fi at a Starbucks or a hotel is extremely important. NordVPN is lightning fast, and with one click, you're protected. Nord also has an array of different tools like real-time threat protection and data leak monitoring, and it watches out for any time your credentials are leaked onto the dark web, and it lets you know when to change passwords. By visiting nordvpn.com/Darren, you can get up to 4 extra months off of the annual plan and a money-back guarantee. Again, that's nordvpn.com/Darren.
Ripe in June to ease the monetary policy stance and start cutting rates. So if the ECB starts cutting rates this month, David, is that going to put pressure on the Fed to start cutting soon as well?
No. And the Bank of Canada probably is going to start cutting rates too. And not long after that, we'll see the Bank of England. I think that the Fed is going to drag its heels a while longer. But I think that you've had other central banks already begin this process. The Fed doesn't have to lead it. But in 6 months' time, we will be talking about a global backdrop of lower policy rates. Sometimes the Fed leads, sometimes it lags. This time around, it's going to lag. But it doesn't really have an influence on the ECB one way or the other. They're responding to their domestic considerations. And the Fed's going to do likewise as far as the U.S. backdrop is concerned.
This is when the Fed lowers interest rates, it actually causes a sell-off because everybody is now knows that the economy is not doing as well as it seems. Now, he says that the Fed could drag their heels, but eventually they have to cave in. That's why he says 6 months later, you're going to see a backdrop of lower interest rates.
If you look at things like what Franklin and Templeton did with their money market fund, or what BlackRock did, it changes the model of how people interact with assets. Now you have an asset that's on chain, it's deployed into a wallet, you're earning yield on that asset, and actually you're controlling the mechanism of how you can move that asset and interact with that asset in real time, right? And so that changes a lot of the models, I think, where it goes from more of a passive basis to more active basis in the control of that asset. And I think that's driving a lot of questions internally at banks in terms of what new models should look like for them.
The system fundamentally is designed on IOUs, debts, deficits. Now, something very important is happening. Franklin Templeton, as well as BlackRock, are issuing assets directly on blockchains. And this gets rid of central intermediaries because now you could just hold the token. You don't need to have an account at a bank. You could just hold the token. So the system is going from an IOU-based system to a credit-based system. This is the reset that we've been talking about. This system is going to be converted into a different system altogether. The big guys like Franklin Templeton as well as BlackRock see the writing on the wall. When I was at Consensus, I heard the Franklin Templeton woman talk about 30 different blockchains that they're active in, and she named Stellar as well as Cardano, Solana, that they have active infrastructure. They're not going to invest that much money if they don't see a future in it.
Yeah, it's pretty much one way. Historically, the way that they get out of it is these really big, dramatic currency devaluations and resets. So, for example, in the U.S., they broke the gold peg in the 30s. And then in the 40s, they did financial repression. So they held interest rates at zero. The long end, they even capped at 2.5%. So a 10-year treasury was capped at 2.5%. While inflation averaged 6% for the decade. And so they basically grew nominal GDP faster than the debt accumulated after a certain point. And they were able to kind of a combination of real growth and nominal growth and basically inflating their way out of it. They were able to do that. But that's that was hard enough to do back then. It's actually, now you have social media. Now you have a polarized political environment. Those things are a lot harder to do now. I think a way of kind of putting it is that when you enter deep into fiscal dominance, default becomes increasingly inevitable, and it just becomes a question of how do they default. So if you print your own currency, you're unlikely to default nominally, but you do things like break gold pegs or do financial repression. And so those bondholders might get paid back every currency unit that they're owed, but they'll be worth less purchasing power compared to if they held other assets or other investments.
Governments are the largest holders of debt. So when the government defaults on their debt, either by printing money to pay the debt or by just simply not paying the debt, this will cause the system to break because they're the largest holder of debt. Now we're at 35 trillion. What happens when we're at 40, 50, 60 trillion dollars? At what point does this break down? What snowflake causes the avalanche to happen? You don't know exactly when, but you can see the trajectory. You can see the writing on the wall. When the governments default on their debt, does that mean commerce goes away? Does that mean global economic activity ceases to exist? Absolutely not. The markets are always going to find a way. And one of those rails are crypto assets. So this is just pushing a vast amount of wealth into little pockets. And once the vast amount of wealth pushes into the little pockets, the prices of all the assets in those pockets push up.
At a time when we've got full employment, right? We are running the most profligate fiscal policy that we have run since I was born. And it's been normalized. Donald Trump normalized it. Joe Biden has normalized it. They have been the two presidents that have done more to wreck the finances of your children and grandchildren than any presidents in the history of this country. And the crypto market understands that. Why Bitcoin is a great long-term asset is because we're in an environment when we have a populist president running on the right and a populist president running on the left. And populist presidents don't like to tighten their belt. Joe Biden wants to forgive more student loans, right? I was talking to a Democratic senator today who's on the Armed Services Committee. He said, I don't care who wins. We need to spend so much on the military in the next 10 years to combat the threat from China and Russia and the new advancements in AI and fighting, that just the increased military spending is incredible. Where are we going to get all this money? We're going to keep printing it and printing it. Those deficits aren't going away. And that really is why you should sleep like a baby owning your Bitcoin. Have a little bit of gold and silver as well.
Now, I understand why a lot of people dislike Mike Novogratz. However, he's absolutely correct with this. When you see something that has a trend and it's not stopping, and you position yourself for the trend, eventually everything's going to work out in your way. It's very hard to determine what happens in the short term with markets, but it's very easy to see the long term. That's why legendary investors like Warren Buffett say that the stock market's a delivery system for the patient from the inpatient to the patient. And that's kind of what Mike Novogratz is saying. You should sleep very easily at night, knowing that this trend is going to continue. This trend doesn't stop until you're wealthy.
That's with banks, right? It's like, we've got JP Morgan, we've got these banks to, do an idea with us. They're never going to implement it. They don't have the same goals as we do. If they wanted to build fair and just economic systems for all, they would have already built it.
The point of crypto assets, the point of blockchains are to make fair systems. Now, these systems have never been fair throughout history, but when everything hits the fan, everybody questions why that is. And that's why we're seeing such vast amounts of wealth moving into the crypto space to begin with. It's because people are beginning to question that. You see, this has already begun. This is a trend that continues to follow because people are losing faith in the old system. So when people say one reset, well, it's happening right now. It's just not. It's not at the pinnacle of it, but it's going to come. You're following a trend, and eventually the pinnacle comes.
Their payments. Somebody would have to make bank-grade software and systems that could settle with digital assets. And so we developed, gone through a number of name changes. We currently usually call the product Ripple Payments, but the division inside the company that builds this is called RippleNet. And this is a proprietary product. It's owned and managed by Ripple. It's sold to financial institutions, mostly non-bank financial institutions, but also banks, payment companies, large corporates, to make institutional payments. And a big feature of RippleNet is that it can settle with a digital asset. It doesn't have to, So you can use it for, any number of payments use cases. Many just don't fit a digital asset. For example, if it's domestic payments within divisions of the same company, it would be really weird. If one branch of a company owes another branch of a company in the US dollars, it'd be weird to settle with XRP. But you can settle in and also like in the early days, there were very few payments that could settle with XRP. There weren't a lot of corridors. There wasn't a lot of liquidity. That's increased significantly since then. So the idea is get institutions using a payment system that can settle with XRP. Then as the infrastructure, on-ramps, off-ramps, and liquidity is available, there's no obstacle to them using XRP to settle their payments.
So as the crypto markets balloon, as more liquidity enters the system, the more utility that XRP has. Now, as this reset is forming, as these trends continue, the banks are wired to use RippleNet. Some of the biggest banking software providers like Finastra have RippleNet integrated into their system. So these banks have access to this. It's just a matter of time before they want to use it. Right now, they have so many different options that are usable. They don't necessarily have to use it, but as crypto takes more and more adoption, as it becomes more and more liquid, it becomes easier and easier to push payments through. At the same time, Ripple's targeted the remittance sector to use ODL, and they actually have the regulations to support that. So the remittances are offering better services for cheaper prices. Eventually, the banks cave in. Eventually, banks are the ones that are going to have to react to the reset that's taking place. And they're all tied to RippleNet.
The advantage of using a digital asset is you can hold a big pile of your local currency. You can hold a big pile of dollars, and you can convert that into whatever currency you need immediately in the destination country. So if you need Mexican pesos in Mexico, you can have them in less than a minute, anytime, day or night, holiday. And so that creates a great experience for customers where they don't have to pre-fund, all around the world. They don't have to anticipate which corridors they're going to need funds in. Again, that's a regulated institutional product. The big thing about it from Ripple's standpoint, and the reason we built it, is because it can, settle with a cryptocurrency. It's also a distribution channel for enterprise DeFi. Like Ripple's company strategy on the RippleNet side, especially, is around bringing institutions access to DeFi products and services that probably not existing ones that won't meet their regulatory requirements, but future like true DeFi applications that can meet their regulatory requirements. And this is a distribution channel of companies that are already running our software in their payment flows. And so like lending products, real world asset, like tokenization of securities, tokenization of financial products, serving future customers, through crypto payment channels and crypto on crypto blockchains. These are financial institutions that are already running Ripple software right in their payment and customer flows.
So the governments can't force the markets to do anything, but they can set up laws and regulations for the markets to kind of guide the markets. And that's where Ripple and the XRP ledger really fit in, is that the banks enforce the rules. The government wants the banks there. They want companies, money service providers, to kind of be the gatekeepers, the guardrails for people to use those rails. The way correspondent banks work is they have, millions upon billions of dollars worth of assets in all countries around the world, different corridors around the world. And those assets are going to depreciate rapidly. As the Fed lowers interest rates, it causes havoc in the rest of the world. Other interest rates are going to spike to combat inflation. The inflation is going to erode the correspondent banks' wealth. So there comes a point where it's just not worth doing relationships in different countries. And that's where XRP's use case really fits in, is being able to liquidate XRP against other currencies at the blink of an eye.
And it isn't always the most economic. And we made a decision that we wouldn't turn a customer away because they couldn't use the model that we like best. Like we want to give our customers the best experiences. We want to provide them a vast array of services. And then it's on us to make the technologies that we want work the best, where the markets are. And so that's kind of where we are now.
Okay.
So XRP wasn't liquid in every corridor. And this is what David Schwartz is saying, is that Ripple never denied customers, even though they couldn't accommodate the customers with the XRP. They took in the customers anyway and built technologies that suited their needs. So now the XRP ledger is more liquid and more money can flow through it. And they're at a situation where they have to take the technologies that they built and redirect them to technologies that they want them to use, which would be ODL and XRP.
And one has to understand that braveness is not the absence of fear, but rather the strength to keep on going forward despite fear.
Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon or my Ghost site, dmjr.ghost.io.